Boy, what a day for the United States stock market. We saw all-time highs achieved on the NASDAQ from an intraday basis. We also saw a closing all-time high on the S&P 500. We closed higher than 1% up for the second straight day, and that hasn't happened in several months. All of this the day following the State of the Union address, where sometimes you will find that politics can kind of bleed into the financial markets the next day. If anything, it kind of helps support trading action here today. So we're going to take a look at all of that. There are a couple of things I wanted to point out as far as nuances that not everybody is picking up on from a factor perspective. And then I want to get into our trade application example of a stock that just raised their dividend here today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 5th, 2020. First off, if you're new, welcome aboard. Remember to go to YouTube, click subscribe. While you're there, check out our description area, sign up for our email distribution list, and then we also have a presence over on Twitter. Feel free to follow us there. My handle is @BrandonVanZ. And lastly, we have a presence on Facebook as well. Feel free to join our group there. All right, let's go ahead and jump into our charts. As you can see, I've got chart 4D, or actually it's 6D, pulled up here yet again. So it's been a while since I've been able to start the presentation 2 straight days with this chart, and it's a good thing in this case. And that means that we were up over 1% for the second straight day today. Yesterday I started the presentation off with it as well, and yesterday we did have a little bit higher of a move. In other words, it was about a 1.5% gain that we experienced on the S&P 500 yesterday with that extended candle right there. Today's wasn't nearly as high, but does get us up and over that 1% hurdle right there that's represented by that blue horizontal line. So anyway, I was looking back, the last time we were able to achieve that would have been back to this time period over here, which is kind of the time period I've been bringing up a little bit more often than not in these videos recently. This would have occurred back in, let's see, it was September 4th, and then September 5th, we had back-to-back 1% up moves then as well. And what I've been kind of pointing out to you guys is, you know, you can see visually from this chart when we start to see more extreme movements. And like I mentioned in last night's video, when we start seeing that, it oftentimes is the market's attempt to shake the weak hands from the market. Now, who ends up being the weak hands, whether it's the bulls or the bears, is anybody's guess, but the general philosophy is that the market will continue in from the direction in which it came. And so when we had this big shakeout where we had big violent moves up and big violent moves down during this time period in the summer, that was a basing pattern here that ultimately led to a continuation of the prior up move. And it looks like that's the same thing that's taking place right now. We're having this big violent moves up and down, and it's at a time where we're kind of just chopping sideways here. But with today, we actually closed at a new all-time high on the S&P 500. I know some of you are probably looking at that label right there and saying, well, wait a second, isn't that label over the 22nd of January? And it is, but that label represents an intraday high. Today's closing high was actually slightly higher than the closing price on that particular candle back there. So anyway, path of least resistance still appears to be to the upside. And there's still a lot of money on the sidelines. Some of you might have seen on Twitter today, I retweeted something from a former colleague that mentioned that there was more outflows of cash in 2019 than there were back in the great crisis of 08-09. And so there's still a lot of people looking from the outside in at the remarkable success of this stock market, which could eventually spill into the market. Their cash could come into the market and push prices even higher once they start letting the fear of missing out work on their mindset and push themselves into the market. We'll see if that occurs or not, but at least we know that that's a potential catalyst to keep the party going here in the United States as we are rolling pretty nicely to the upside. Let's go ahead and get back on track with kind of our normal routine here. I'm going to pop up on over to 4B now. Remember, if you're a premium member of Market Scholars, you have access to all 50 of our premium charts. Anyway, this will give us our high-level overview to give a sense of what's been happening with the 4 major U.S. equity indices. And the default view for this particular presentation is the market forecast technical indicator, and in particular, the intermediate line on the market forecast technical indicator. Remember, the intermediate line is the green line that you see down below here. So there are some things to report today. First of all, like I mentioned in the intro, we got a new all-time high on the NASDAQ. We got a new closing high on the S&P 500. But also worth discussing is the fact that we had big up moves in the Dow Jones Industrial Average, which was up 1.68% today, and it was enough of a vault higher where we now have a weekly bullish posture. Notice how the background color of the chart changed from pink back to green, so that's good. That means that, you know, all four of our charts now are basically saying the same thing, bullish conditions. Remember, Dow Jones was our one holdout in last night's presentation. So now that that has kind of joined the party, it's a clean sweep. All four of our charts are bullish. I can also say that all four of our charts now have green moving averages as well as a result of what happened down below here with the Russell 2000. Notice that today's move in the Russell 2000, which is about 1.52%, pushed us up and over that moving average. Not only did it get above the moving average, but it actually changed the shape of the moving average. Yesterday, the moving average was still going down a little bit. After today's big move, and really it's going to incorporate all three of the most recent big moves because this is a 30-day moving average, so there's 30 data points. But nonetheless, these last 3 days have been substantial enough to the upside to actually pull that 30-day moving average higher as of this moment in time. So while the Dow and the Russell 2000 do not have highs, new highs like the NASDAQ and the S&P 500, they're still important players in this market right now to help bolster the confidence of the bulls out there. One other thing I wanted to point out here is that the NASDAQ had been a leading area of the market. I talked about yesterday how the NASDAQ had surged, I think it was 2% yesterday. It was up today, 0.43%, but it actually represented a little bit of a letdown by the time it was all said and done. You can see that the stock, or in this case the index, was trading a lot higher on an intraday basis, went all the way up to 95.74, but then fell all the way back down to 95.08. Now, just like I mentioned yesterday in the NASDAQ Composite surge, part of that was a direct result of the success of Tesla shares. Today, they were on the opposite side of that sentiment. So if you were to take a look at Tesla, which has been kind of the talk of Wall Street here this week, it's been all over the board. Yesterday it surged, actually 2 days in a row it surged, but today it gave back a significant chunk of those gains. Notice that we were down 17% on Tesla today. Truly remarkable. I saw some folks on Twitter saying that resembles an Eiffel Tower pattern. I don't know if that's an official technical analysis pattern, but nonetheless, I think you guys can kind of see where they're coming from there when you have such a high peak like that and immediately give so much of that back. So we'll see where that takes us. Obviously, Tesla is still a runaway success story over longer periods of time. It's still up, about 131% in just 3 months worth of time. So despite the really ugly 17% give back today, most people probably weren't too hurt on that. Then again, another thing I saw on Twitter today was how some college kids are out there day trading Tesla stock during their classes and claiming that they're going to be paying their tuition off of that. So I wonder if there's a lot of college students out there that ended up having to call their parents after today's bloodletting in Tesla asking for some more funding. Anyway, markets obviously quite bullish right now. We do have bullish intermediate term postures across the board, strongly bullish postures with the S&P 500 and the NASDAQ, and weekly bullish postures on the Dow Jones and the Russell 2000. All right, let's quickly come on over here to the internet and see if we achieved our goal of getting to 100 likes on Twitter or not with yesterday's video. When I pulled it up right before recording here tonight, we were at 96, and I think that's probably where we ended, but just to be on the safe side, I'll click refresh here just to see, because that will impact us here tonight. In case 4 other people came in and liked it while I was preparing for this video. But as it's refreshing here, I'm not seeing that is going to be the case. So we will keep it as a short video here tonight. As I've mentioned yesterday, you have the ability to vote. Yeah, and there it is. It's still 96. You have the ability to vote on whether you want a full-size video of 30 minutes or a half-size video of 15 minutes through your likes on Twitter. If you have more than 100 likes, I will assume that you want a full-sized version of it. So make sure you're going out of your way and taking the 5 seconds to either click like directly here on our website or just going to Twitter and going to the top of my timeline to find it. If you want a shortened version, an abbreviated version, if you don't like those lengthy videos, then just don't do anything. Don't click like and don't do anything. So we'll hint one way or another on that. So tonight we'll keep it at a nice and short video. But I'll do the same deal for you guys next week when I'm back with you. If you want me to do a 30-minute video instead of a 15-minute video, just take the 5 seconds and click like on Twitter. It's as easy as that. Also, quick programming note for next week. David and I will be switching our Thursday and Wednesday. He had some things going on from a personal perspective here in the last few months where he wasn't able to do the video on Wednesday, so we had kind of swapped days there. But going forward, he's now going to get back on track with his normal schedule. For the Market Outlook video, at least, our premium classes are going to stay the same times, but the Market Outlook videos, we're going to be going back to the old way where he's going to do it on Monday, Wednesday, Friday, and I'll be doing it on Tuesday, Thursday, and that starts next week. So just be aware of that as well. All right, let's get back on track here. Real quick, I wanted to show you on the factor selector. This is produced as of last night, so this is last night's closing information. Interestingly enough, momentum was number 1, value was dead last. What I wanted to show you here on our charts is that we had a really interesting shakeup that took place from a factor perspective today. If I pull up chart 3D here, you'll see that the momentum factor actually was the worst performer today after having a heck of a run since the beginning of the year. It was up on the end of the day, but just barely, 0.05%. That was the worst out of these 6 charts that you see in front of you. On the other hand, look at value, which is the chart in the lower right-hand corner. It was up 2.34% here today. I noticed a lot of oil and gas stocks doing really well today. Even lowly old Exxon Mobil was doing a little bit better today, and Chevron and some of those other big oil companies that have been kind of on the outside looking in on the rally so far in 2020. So we'll see if maybe some of those value-oriented areas like the financials and energy stocks can start picking things up. Today was a very good first step towards that, with the value factor leading the charge here today, leaving the momentum factor in the dust. So value factor up over 2% today, momentum factor essentially flat, and that has not been the norm. That is the opposite of what had been happening in 2020 up until today. All right, let's get into our trade application example. I'm going to come on over here to our dividend stair-step chart. And as I mentioned in the intro, I wanted to focus on a company that actually just announced a dividend increase today. How's that for timely? And that's Corning. Some of you might have seen that I retweeted that on Twitter, so make sure that if you like dividend growth investing information, you're following me on Twitter because I will oftentimes tweet that kind of information out. But anyway, earlier in the session today, Corning increased their dividend by 10%. You can see that the stock was up fairly nicely today, 2.57%. But with that increase that they announced, that means that these dividend stair-step lines are going to be going higher as well. And like I mentioned in last night's video, the dividend stair-step lines have been updated on the Dividend Aristocrat stock so far for 2020. Now, Corning is not an aristocrat, so we still have the information from last year on that particular one, but just wanted to remind those of you that are trying to keep up with our chart updates along the way if you're a premium member. But with Corning having or being in kind of this blue zone down below here, it actually represents right now, if you were to factor in the 10% increase that they just announced today, this stock is now yielding over 3%. So I know this yield up here says 2.83%, but that's because it hasn't incorporated the dividend increase of 10% that they just announced today. So I'm sure Thinkorswim will be updating this here in the coming days, but just be aware that as of this exact moment moment in time. Corning has a 3% yield, and it's fairly rare for it to do it. It's not unheard of. It had a 3% yield right back here in 2015 for a moment during the flash crash, maybe even early 2016 right there, and then maybe a time or two right here in the fall of last year. So it's not completely unheard of to have a 3% yield, but it is still quite rare. As you can see, over the last 10 years, typically Corning does not have a 3% yield. Usually its yield is somewhere between, let's call it 2.5% and 1.5%. So this is a fairly rare time to pick up a decent technology company that's shown a history of selling or of paying higher amounts of dividends over time. So what we'll be doing today is simply selling a put, going out to the March contracts here and looking at the first one that has a 1% return on risk. That's your 26 strike. I'm going to click on the bid right there. I'm going to do 4 contracts in this case, and we're going to try to get filled at 27 cents first thing in the morning. Remember, when we're selling puts, in this case at the 26 strike, we have to be willing to buy Corning at $26 per share on expiration day in March if the stock were to fall below that. Until then, we get to keep that premium. All right, well, thank you for joining me here yet again tonight. Bullish market rally across the board. It's fun to see these back-to-back 1% days. Remember that David will be back with you tomorrow. If you got value out of tonight's video, be sure to click like for me over on Twitter if you want me to do an extended video on Tuesday the next time I'm with you. Until then, I want to wish you all the best of success with your trades and your investments. Goodbye for now.